Everyone who has not been here before, this is BrightInvestor office hours. Normally we have about anywhere from 10 to 15 people usually. What this hour is designed to do is to, one, if you have a deal that you're under contract on or a deal that you're looking to analyze and you want some double checking, I'm here to help with that. If you have a market you're looking at and you want me to help you out when it comes to is it double checking your work or giving you my opinion on how to analyze a market, here for that. If you've been having an issue with BrightInvestor and you want to work out how to fix it, I'm here for that. If you have a suggestion on how to make BrightInvestor better, I'm here for that as well. So go ahead and this is your time for the next hour. I want to let you guys know that I'm here to help however I possibly can. And with that, I'd love to turn it over to you guys and ask any questions you have or anything you want to see done while we're here today. And also, I'm open to letting you guys know if you have any questions about what's coming out with the product over the next week, next couple weeks, and then new features, new updates, and new patches that we're submitting. Happy to give you guys an update on that as well. Keep you updated on what it is that we are working towards.
Okay, I have a property I'd like you to help me analyze.
All right, let's do it.
And this is
Can
Cindy
you?
Scarborough. Shannon is my daughter. I'm on her laptop.
Oh, perfect. All right, no
But
problem.
you can call me Shannon. I'll answer to that.
Perfect. I do.
Okay,
All
so
right,
I'm looking at a property that it's in Gainesville, Georgia, and I'm looking at it as an MTR, and it's a 6-bedroom, 3.5 bath, and it's got a kitchen upstairs and a kitchen downstairs. It's a very unique property, and so I'm having trouble, one, finding comps, and two, figuring out if I use it as an MTR, would I do it by the room or would I do it upstairs, downstairs, that kind of thing.
Okay. Can you go ahead and give me the address?
The address is 3460 Maynard Circle, Maynard, and that's Gainesville. Yep.
Okay. All right. And you said it's a 6-bed, 3.5 bath.
Mhm.
Is that correct?
Yep.
All right. So the Silo's calling it a 4 bath, and it's really a 3.5. So this, I just want to show you something. This is a perfect example of why we do this in BrightInvestor. When you're in BrightInvestor, you can click this little pencil icon, and we can turn the 3-bed into a 3.5 bath.
Okay.
So that what that do is, or a 4 bath, if we want to call it a 4. So we can say, we're going to call it a 4. So what we can do is basically look at that and we can edit things as we want to. So before we even start looking at the property itself, I want to get an idea of what's going on here. So it's clearly outside of Gainesville, Georgia. I'm looking at it's clearly a waterfront property.
It's off the water, but it's near the water.
Yeah, and so I'm looking at this and I'm seeing, okay, definitely I can see a lot of boats on this lake. This is definitely a vacation rental kind of market, isn't it?
Yeah.
Very much high. Yeah.
Yeah.
Really nice property right down the water. Okay.
But it doesn't have
Um,
direct access to the water. The property
okay,
next
does not
to it has the access.
doesn't have direct access. Okay, and then we're a little bit further away from downtown. Okay.
And
So let's see
it's
what we can
about
look at
10
here.
minutes from the hospital to do it as an
Okay,
MTR.
let's go ahead and take a look at this. So first off, we just want to go ahead and take a look, see like how properties are appreciating overall in this area. Now, especially if this is a more of a vacation market, we want to be a little cautious when it comes to resale value of homes. So what I'm looking at here, right, is overall the city of Gainesville, right? Home prices were actually having negative where they weren't doing so hot before COVID. They went from a peak of about 340 grand down to about 270 in about a 2-year period. Then during COVID, we saw a massive run up, which was awesome, right? We went from approximately 260 all the way up to 500. So home prices doubled in 4 years. It's pretty fantastic. But then since then, home prices started a little bit of a decline, but overall they've been keeping themselves elevated. So it's a solid appreciation. The one thing I worry about when it comes to vacation markets is if vacation rentals aren't doing so hot and people start selling off relatively quickly to recoup some of their losses, what that can have a negative, very fast impact on our property values. Now that doesn't seem to be happening here, so which is good, but I just want to be courteous of that. Now, this area, the zip code that we're in, is teetering on the median house price being around $650,000. So it's definitely appreciating really well. It's actually one of the most expensive markets, actually one of the most expensive zip codes in this submarket. So I don't love buying one of the more expensive part of town, but it can be justified depending on the kind of property we're looking at. Now, what I do want to check out as well is the local income for this zip code. I anticipate it being pretty high, but especially for a midterm. Yeah, to me, our incomes went from $62,000 all the way to 88, so very fast income growth. Now, the reason that's really important is because I personally recommend buying properties where if you had to long-term rent them out, you're at least going to break even. And so we need to make sure that the income of the people who are living in this area is high enough to support the rent you would need to break even on this property if you had to. So based off the 30% rule for rent, people can on average afford about $2,700 a month right now, which is solid. And we've definitely seen some really rapid income growth, which makes me feel more confident. So I'm going to keep that 2,700 number in the back of my head. Next up, I do want to check out what kind of properties are more common here. So for this zip code, right? Properties, most houses are 4 bedrooms. You're a 6 bedroom. So you're, like you said, right, very unique. Most of the market is 4 and 5 bedroom housing. And I'm going to bet that most of the housing here is single family as opposed to anything else. But I just want to confirm that. Yeah, so almost 87% of the market is just straight single family. And that's in mobile homes, interestingly enough. Okay. Now, when I look at this type of area, I'm expecting a lot of people are owners. And yeah, so that's exactly what I expected. So watch 12 years ago, right? 81% of the market was owner dominated. So my rule of thumb is you want to be within 30 or 40%. So most of the people who were living here owned their properties and they lived in them. And this is their vacation, this was their home, this is their retirement home, what have you. But over the past decade, look at that. Went from 19% renter occupied to almost 45% renter occupied. You have had a massive, massive jump in the number of people who are buying properties and renting them out here. Huge jump. For me, when I see things over 45%, that means there's getting to the point of a little bit too much supply, in my opinion, when it comes to renter housing. I like to keep it between 30 to 40% because it means there's demand there, but there's not so much supply that I'm going to have negative downward pressure on my rents. So I'm a little concerned about that, but it's not, it's still 45%. My rule of thumb is 30 to 40, so it's not too high over the realm, but there's definitely been a massive demographic shift here. That does make me wonder if we're going to see some regulations against Airbnbs in this area or short-term rentals in this space, depending on how much the renter side has grown here. Now, the next thing I'm going to look at is franchises. Just get an idea of how close is this to things like are there any Chick-fil-A's nearby? Okay, great. Are there any Trader Joe's nearby? Yes. Any Whole Foods nearby? No Whole Foods. No Target nearby. Starbucks nearby. And so, especially as a midterm rental, whenever we can see these type of franchises in an area, that is catering towards a more high income demographic. So if we're going to go towards midterm rentals, the fact that these are here is beneficial for us. Now we are a little bit further away. And so I always think about like convenience. So for this kind of property, right? This is not pop out the driveway, walk 5 minutes and you're downtown. Right. This is a bit more remote, a bit more put away, and that might be the appeal for this property. It's absolutely not a problem, but it is something that we have to be cognizant of that this is not the most convenient location for people just to pop in. But I can definitely see here that we're right on 284. So they're just a few minutes, they can pop on this road and hop in whenever they need to. So it's not necessarily too far away. As to say, something like being up here around McCrary, where you're that far away from anything more locate. So I like the fact that has close proximity to this major thoroughfare to get them to the downtown, and that most of the high income facing franchises are on the north side of Gainesville. Now, businesses wise, you said that this area, mostly where the restaurants are. So if someone's going to get food in Gainesville, Okay, so they're popping downtown. This is where all the restaurants are, right down here. Where's the medicals? Okay, medical is right down here as well. Okay, grocery. Okay, okay, so they're just this is their lifeline right here. Okay, so it's still close by. They're not having to drive too far away. Because all this is to me is thinking about like how do I sell this? When I'm writing the description for the midterm rental, what is in my favor and what's not in my favor? And I can go here and say, hey, hop on 284. You're 10 minutes away from the medical group, the Mexican restaurants. Okay. So I like what's going on here. What I do want to check now is just days on market. So this is what we look about when it comes to how much of a lowball offer can we make and what's happening in the local metro, right? So right now, the median days on market is about 43. Now we can see back in 2017, 2018, 2019, and this is we're in November right now. So November. November in 2017 was hovering around 88 days in the market, right? And this is 85 days and, you know, 90 days. And now, right, this is back from July a little bit, but we're hovering right on the 43-day mark, and we're seeing that properties here have been selling faster and faster. So for us, that's good. What we don't want to do is ever get locked into a vacation rental or midterm rental marketplace where you are stuck with a property that you physically can't sell because people just aren't looking to move in here. So the fact that the days on market is trending down is good for us. And the fact that we even saw some really fast sales happening here in 21 and 22 of 30 days over the summer is good. Um, Now, comparing this to like June and July of 21 and 22, right, where homes were selling in 30 days, now they're selling in 43 days. We have gotten a little bit slower. So the market's not as hot as it was 2 years ago, which is great. Now it's okay. You expect that. But we also know that it's getting faster over time. So this is for me basically a risk tolerance. So now I'm going to go with help with our comping. I'm going to look at a price per square foot. So especially when you have really unique properties, we use price per square foot to get an idea of reasonably, we can't find an exact match, what should we be expecting for valuation? And right now, it's about 240 bucks a foot is where we're expecting properties to trade for. So now let's pop open your deal. We have our 6-bed, 3.5 bath, right? Okay. They bought it for $162,000 back in 2017. Okay. And looks like it's finished. They have a bunch of equity in it. And yeah, there are very, very few comps that even they come anywhere close to this property, except for this one that was a 2,800 square feet, 3-bed, 3-bath that sold for almost 872,000. Wow. Okay. So that's going to be a little bit rough. So what we want to do is go ahead and pull open our price per square foot calculator and see what we're seeing here. So we were at $241 a foot at 3,600 square feet. Based off the average price per square foot in this area, that put this property at almost $870,000, which would be close to what this one sold for in this area. That's insane. That'd be crazy.
Yeah, but my question about that is like some of these lake properties are like luxury high end on the lake. So this
Yeah.
one is when you see it, it's like a 1960. I'm not sure what they used it for, but it's not luxury. And also,
Hmm.
second question is, do they count the downstairs finished basement the same as they do the top
Yes.
level?
That's a problem that we have with all realtors, right? Is what are they counting all the square footage on? So that's why I'm going to filter by build year. So there are some other 60s vintage products, but like you said, like this thing, the square footage is way bigger. Doesn't make sense. So I'm just gonna let's go ahead and pop this open, take a look at it. So we have our carport, big bench. Would you be wanting to dump some capital into this, or are you looking to buy something
I
turnkey?
could yeah, I would do like some private money lending to rehab it a little bit.
Okay, yeah,
That's my other
definitely.
question is how much do I
Yeah,
make it better to make it some of the bathrooms are okay, then the downstairs bathrooms are not okay. That gray
yeah.
kitchen is downstairs.
And they have two kitchens.
Yeah.
That's really interesting. Small workout room. Yeah, I see what you mean. Yeah.
That we'd have to add a shower to that one.
And it doesn't have the boat house and it doesn't have direct water access. So,
Correct.
yeah, I could definitely see the square footage. I mean, they basically renovated the entire bottom to be another almost another living space. But having that much square footage is just, yeah, looking at this. 6 bed, 2 kitchens, 2 family rooms. Hmm. Okay. Well, also we're seeing that it was on the market. It's been on the market for 85 days, which we saw, right? Now that definitely tell the fact that it's been on the market for 85 days, and we know the median days on market is around 50, 40 to 50, means that they've definitely overpriced this for what we've been seeing, and it's sitting a little bit longer. So that gives us the confidence we need to actually go through and make this a lower ball offer. And I can see
So
a
I
lot of
have
the
one more
comps.
question. I don't mean to keep interrupting, but when it
Yeah,
has 6 bedroom, 3 baths like that, and we're having trouble with comps, and you look at the pictures, and they're actually like it's like that weird workout room, and it's that
mm,
weird bedroom off to the side. Like, would you make it more like a 4-3 to comp it, to get
we could,
closer?
yeah, we absolutely could do something more like that because, like, we can see, right? I have a 4 bed, 2 bath that was built, right around the same vintage, but it's just a heck of a lot smaller. And that went back in 3, 4 months ago for 195 or 118 a foot.
That's
And
why I
so I
think
have,
pricing it so high is they're counting every little room as a bedroom.
I think so. And
Yeah.
so I think what we're gonna do here is we're gonna have to back into this a little bit more.
Okay.
So for a for a 4 bedroom property, right? A 4 bedroom in this area, based off some 7 different comps, is renting for about 23 to 2400. And your insurance estimate for a long term for a landlord policy here is going to run you about 140 or so. So if you were to buy this as a long-term rental and you had to rent this as a long term at 20% down around today's interest rates, you're bleeding money here. So there's no way, even if you got this as a property, that you could not rent this at this price at a long-term rental and break even. So that right there is telling you what we can and can't afford to pay. So like just to back into this, right? If we were at, geez, you'd have to be at almost $250,000 for this to cash flow or for this to break even as a long-term rental in this market.
Yeah, which is what that other
So,
house was sold for about.
mhm. And so like for this is a great way for us to see, hey, this is where it makes sense for us, right? Because really it doesn't matter what they want for the property, it matters what we can pay for it.
Yeah.
So let's talk midterm rental, right? Midterm rental estimates that we could buy this thing for, we could probably get between $4,800 a month for a midterm rental is our estimate on this property. And we can always double check with the furnish finder. And at that level, it could make sense. Now, let me ask you questions. Have you spoken to their broker? Have you spoken to anyone about how this property has been used in the past? Has it been a rental? Has it been a midterm rental? Anything like that?
No, I haven't inquired yet.
Okay. So if we don't know if the property's been run as a midterm rental before, it would be useful like I'd call and ask them if how the property's been performing, if it's been a midterm or a long term. We typically look at 11 to 15% vacancy as our kind of sit-in number. But for us, let's say we get a bit more conservative. And would you be managing this yourself, or would you have someone else manage this for you?
I would, for the midterm, I would manage it myself.
Okay. So if we had all this here, right, and you had 15% vacancy and we got to the 4,800 for the midterm rental, even at asking price, you're not cash flowing anything. That is not worth it to you
Yeah,
as a return.
yeah.
So we want to see at at $100,000 discount, you're just starting to get a 7% return, just barely. And that's not a lot of margin.
Mm-hmm.
For something like this, I want to see you around a 10 to 15%. So like that makes more sense to me.
Mm-hmm.
A $300,000 acquisition price hits you a 14% return, $1,000 a month in cash flow, but that's assumes we're getting our $4,800 in our operation here. So for me, if I were to do this, I'd want to call the agent and I'd say, hey, has this property been used before? If they've been using it as a midterm rental, great, let me see the performance. But if not, then heck, you're going to offer 250 as a long term or $300,000 and you can make it as, let's see, if we were to run this as a, if you were to buy this for 300 grand for 20% down at today's rents, you would just be losing money on the property. So at a 200 $300,000 price, right? You could hold this property and only be out a couple $100 a month versus a rent to rental. But when I'm looking at this, there's no way I would ever endorse you paying 479 for this thing. No
Yeah,
way.
yeah, yeah.
The square foot, I don't think square footage is definitely not typical from the marketplace. The property is older vintage, it has a whole other side here, which is great. But from a cash flow perspective, it does not make sense. I would recommend making an offer between 250 to $300,000 if you were to come in and buy this property for the cash flow perspective. But like I mentioned, if you're going to do this as say a midterm rental, and we're estimating you're gonna spend maybe 25 grand furnishing and doing some light renovations here. If you're gonna do more rehab, you might need to bump that up to say 40,000. Your cash on cash return is gonna suffer.
Mhm.
But all these things considered, I like the fact that it's a unique property. I like that it's really close to 285 going down. I like the fact that the days on market are about 40 right now, and that this property has been going longer than that, so we can make themselves an offer. I like the fact that the appreciation has been solid, and I like the fact the income's growing so quickly. But we're not paying 479 for this. You do not have, I was like, you do not have my permission to pay 479 for this at all. Do not
Nor
do it.
mine.
No way. So
Yeah, that's
I
where I
hope
was
that helps.
struggling. I was like, why can I not make like it just wasn't making sense. So yes, I see how you do that where you go in and you say what does make sense. And then
Exactly. Because I'm either going to look at the sales comps if it's a traditional property. If it's not, I'm going to look at the price per square foot. And if that's off, I'm going to go ahead and back into it. So for me, for this to make sense for you on your ROI and return on investment and ROE, return on energy, you need to be paying no more of the 300 grand for this thing. No more.
and
And like
then
when they say like, hey, sorry, there's just nothing in this area that's this old with this much square footage. This doesn't make sense. Sorry.
yeah, and then and you never know why they're needing to sell or if they do have to sell. They might not have to. But
Exactly.
and then how do you figure out the ARV on something like this?
Yeah, so I mean, part of that would go back to our comping. And so on a per square foot basis, right, we would take a look and see the fact that, well, on a per square footage basis, this thing could go for as high as 800 or $900,000. Now, the other issue with this, though, is this is the difficult part of being in a vacation rental marketplace, right? We have a much smaller supply of housing than, say, somewhere else. And because this is still a residential property, it's still 1 to 4 units. This property is going to be entirely valued based on the comps nearby, not as a function of the income it generates. So you could realistically come in here and spend $100,000 renovating this property, but unless a nearby asset of a similar square footage is going to sell for something for anywhere in this range, you're not going to hit the 800, $900,000 per square foot basis. I would what I would be looking at is taking a look at the other sales comps nearby that were similar vintage. And we're hovering right around, this one's pretty small. I'm gonna turn that one off. They're hovering around like that. So we were at 240 a foot, right? Most of these comps are hovering around $230 a foot. I would probably take the 230 or so dollars a foot and I would back that into around the 13 to $1,600, 1,600 square foot around here to get an idea of what the thing could be worth. So I would take my 230 a foot and I would cut my square footage in half, 1,800. And that puts it at around $415,800. That's what so I'm trying to comp this out against what are other similar properties nearby selling for. And there's just nothing that these things are selling for that makes that much sense as far as so I would not be confident in taking this property and being able to refi it and pull out a private money loan on this based on the fact that it's so unique. And like you already mentioned, it doesn't have that direct water access. And a bunch of the comps that we're looking at that actually make sense all have that kind of water access. And so we already know it's going to be a pretty unique situation. So yeah, so take a look around here. Oh, so there's the house right over there. It's basketball court up front, and there's the house. And then it backs up to this road, it looks like. So
Yeah,
so
that
there's the
road
house
that goes
right there.
behind the house is the driveway for the house next to it.
Yeah, see, this is such a weird, it is such a weird house.
Yeah.
It doesn't make sense. I have this house right here with direct water access. Yeah, okay, so there you're saying there's a drive, yep, there's a driveway. And this house is the one that has access down here.
Correct.
This, so that means like, also, here's the question, right? With buying this house, do you also get the land down here at all? Or is it just this, what's included in the
No,
sale?
you get like a weird pie shape that goes to the front of the house. It kind of
Okay,
goes
so
down. Yeah, it's
basically,
a weird.
so if someone were to buy this house, you couldn't advertise waterfront access. You couldn't advertise them going down to the water at all. They're landlocked.
Yeah, the
For
only
me,
way to really increase anything is if they would allow building and that where all those trees are down on the bottom right.
yeah,
If you could do like an ADU on that by that
and that's
circular
assuming,
drive.
yeah, but you'd have to work with this owner to get them to allow
And
you
like
to
in
make the
front of the house, if you go in front of the house that we're looking at, the
right here.
property actually, this clump of trees, I don't know how to show it, but right below you where your cursor is right now, that
Yep.
little clump of trees, that is is the property for this house. So if for some
Okay,
reason
so
you could build like a little ADU there.
you could, but sorry, what I'm saying is like for them to get access to the water, there's no way for them to get access to the water for boating, for beach activities, or anything
Correct.
without working with this owner.
Correct.
And so for me, like I'm seeing this, we're looking at the properties. A clear advantage of being here is having waterfront access. And this property is just tapped right in the middle. I think it's a landlocked property in a water-centric vacation rental. I think that's going to be a critical cutting you off at the knees. Plus
Mhm.
the fact that it's so difficult to comp, it doesn't feel like something that you're going to be able to pull a 200 to $300,000 renovation and then refi out of it. I personally, while I like the market that it's in, I think this asset is a little too high risk and you'd be in danger of not necessarily turning the profit that you're hoping to make with this kind of deal. And I think it's overpriced. But those are my 1, 2, 3, 4, 5 cents altogether.
Yeah,
Does that help?
very much. That's what I was thinking, but it's such a weird property. I appreciate your insight on that.
Yeah, absolutely. Because like for you, I would much rather see you like own something that had the direct water access here. Because
Yeah.
that's it's clearly the advantage of owning a property in this realm.
Yeah.
Clearly. And if you're going to own a midterm rental, it's like people are going to show up and what I hate to happen is people show up saying, I booked this property with the expectation that my kids could walk down on the water, or I booked this with the expectation I have a boat here that's
Mhm.
I trucked all the way over here. What do you mean I don't have a put in?
Yeah.
And so then these people are having to drive out, go to a public place that has a put in. Maybe this place, I don't know
Yeah.
if there's a
That's the
public put in.
marina. Yeah.
Yeah, so they'd have to drive down here, but there's no way for them to actually get in. It seems think is a little bit too big, too many bedrooms, and it's serving a clientele that you necessarily can't attract or don't want to attract for the property itself.
Yeah. Yeah. That's exactly what I needed to hear. So on to the
You
next one.
got it. On to the next.
Yeah.
And I'm
Thank
glad
you.
that's exactly why we have, sessions like this, because
Yeah.
like that's why I love it when I can get like a midterm rental and I'm finding a property. It's like, you know what? Unique properties make sense sometimes, when you can do like something like an experience, right? Like the short-term rental space is all geared towards experiences. And midterm rentals can be as well. But for you, right, mid to rental, you are by definition trying to get someone that's going to be there for 30, 60, 90 days, longer periods of time. What kind of person wants to be in this area that's willing to be here for 30, 60, 90 days that doesn't want water access when you have that much space? Right. And we
Right,
start asking those kinds of questions like, who's our client? It's not summer vacation. It's not family summer vacation here for the whole summer. It's not someone that's coming up for that's going to be storing their boat in here. It's this is geared towards a large organization, a large family, or a large meetup. But those family reunions don't last for 30, 60, or 90 days.
yeah,
That's like a 1.5 weeks max. So that
yeah,
I know
okay,
I'm being a
thank
dead
you.
horse, but yeah, that's
Yeah,
that's my
no,
thought process when I
yeah,
look
I
at this.
really appreciate that, all of that. So, yeah.
Of course, happy to help. Brent, any questions that I can answer for you, man? I know you've been hanging out and just absorbing knowledge. Would love to see how I can offer you guys some value.
Oh, no, thanks. It's been great listening in and getting to understand. Thank you.
Yeah, you got it. So, like, what I'll do, I'll show you guys an example. Show you a property that I'm offering on right now. Um, well, I'm pretty sure I'm gonna be offering on here pretty soon. What's it called? I think it's 3415. So this is an example of what I do every day. So I work on both on market and off market. This is a property that is actually right down the street from where I live. So I live in St. Louis and I live right here on this street. And this property is just a few streets over. I think this is the right one, if I'm not mistaken. No, it's not. Wrong. Okay. I'm looking for Giles. I think it's hold on. Let me pull the address up. So let me show you how I'm doing this. This one happens to be a on market deal. It's 3472. Go. 3472 Giles. Here we go. Okay. Yeah. Oh, 3472 Giles Avenue. There we go. Okay. So looking at this multifamily property in this area, and it's pretty interesting. This property is a duplex, and I'm looking to check it out for it on market. This came on the market, as owner for a little bit, and it's a one bedroom, one bath units. So I know that in this area, a 1-1 was rents for a ride around $800. No, it's actually this one's off market that I've been working on, but I'm looking at making an offer on this bad boy because I'm going to come in here and make him an offer for around like the 170 range and know that I can get into this for super, super cheap, but cheap little duplex that I can manage myself. And I'm writing the numbers on this, and I do this all the time. I'll get folks who are on market, or I'll find on or off market properties, or an agent will send me something, and I'm just firing it right into here to figure out if I want to maybe 347. Yeah. So I'm looking at some multifamily right now in this area. Yep. Oh, that's what I was doing. Whoops. 347 4. There we go. Yeah, this bad boy. This one I'm pretty pumped for. So this one, I just take it because MLSs do a horrible job at doing bedrooms and bathrooms for multifamily. It's a 4-4. This guy, they're putting it on the market, and they're gonna put it there. It was on the market. It came off the market for a while. It just gone back on, and so I know that right in this area, a 1-1, which is what these are. They're all 1-1 apartments. These rent for about 850, and I know that I can get this property for 280. So a huge discount to its market value, and they're going to rent for about 850 each. That's about $3,400. and I'm going to be able to put about 5% down on this. And so my net cash flow for 20 grand out of pocket, it's going to be 500 bucks a month, almost 600. But my gross cash flow on a monthly basis is going to be almost $1,200 when I look at this. So this is an example of a deal that I want to do. I'll be offering on here pretty soon. Gets me excited. And so right now I'm working a lot with hard money lenders, and I'm working with creative finance folks. And so when I get my deal like this and I have my insurance, I've done all this work, for my landlord insurance policy, it pulls a policy. That's when I'm getting my report out. And then I have mine white labeled, which you guys can all do too. So Shannon and Brant, when you guys are looking to send a report out, you can replace this logo and replace these colors up in your profile section. And so what I'm doing is I'm taking these properties and I'm sending it over to my hard money lender and saying, hey, here's what I'm seeing here. Here's what I want to buy. Here's what's going on nearby. And getting them to lend me the money based off what I'm seeing here. And I'll normally send them some kind of notes, like I'll say, just came on market, or it's really not, it's about to come back on market, about to come on market. Purchase for 280K, thinking about, bumping rents to 850. So that's what I'll do. I'll take a look at it. And for you guys' information,
5% down.
how am I getting 5% down? So there's some loan officers that I've been working with that hold their own loan products. And so if you can do an owner occupancy on a property, and they will do, even though I'm 1099 because I'm a contractor, I don't have a W-2 job, I'm self-employed. They will hold their loans in-house and do 5% down loan products. 5% down loan products, about 7.5 to 8% interest on multifamily buildings.
So are you moving in it or you're not moving in it?
I'm running it both ways. So like I live close enough, I might actually just go and move into it myself and live there and make it happen. Otherwise, I might just hold it and stay in the one that I'm in right now and do the 20% down.
And then can you explain what the graphs are at the bottom of that report?
Yeah. So what we do to make it easier is, how we have like appreciation, days on market, new listings, we have all that data. So what we do is we pull that for you. So if you're going to show this property to somebody, we will go back and we'll say, hey, by the way, the median home price for this zip code around this property is $180,000. And here's how it's changed over the last 12 months. And here's what the median price per square foot is. Here's the average days on market for this zip code, and how many new listings have been coming on the market recently. So we will summarize the market research for the zip code that this property is in for you. So when you're talking to somebody else, you have this right here for you.
Nice. Okay.
And yeah, and we have a upgrade coming out next week where this will also include population growth and income growth for the zip code that you're in. So you'll be able to look at the fact like, oh, why should we do this deal? Well, the population is going up and the income's going up. And right now the days on market are really high. So they're having trouble selling properties and we should make a lowball offer. So basically I'm putting the tools in front of you to be able to sit down with someone or basically make your case of why it's a good opportunity to buy.
Got it.
Any other questions that I can help with? Otherwise, I'll give you guys a little rundown of everything that we are bringing to the product in the next couple of days for a new version.
Okay. Yep, I'm good.
All right, so a little high level. In the next couple days, we are releasing a bunch of upgrades. We have now done about 5 new versions in 5 weeks. We're pretty happy about that. But we are adding in the population income on the side. We're adding in the ability to do co-living and BRRRR calculators inside the product. We are adding in a new rules of thumb. So anytime you look up a property or a data type, it'll have a little rule of thumb for my personal metrics that you should be looking for. You'll be able to filter rent comps now. So the same way that we have sales comps, you can toggle them on or off. You'll be able to do the same thing for rent comps. And you're going to be able to now pull lists of as much as 500 properties at a time, as opposed to the 25 we've done for a long time. And we're adding in the ability to draw a boundary and search for properties in that boundary, which is all coming out very soon. And then we have another list of upgrades that we're making at the end of the year that I'll release soon as well. Last thing I'll say is a little sneak peek, because you guys are here and you made the time. We are doing our first ever Black Friday event, a special offer. You guys will get an email about that in the next day or two. But it's the first time that we're doing a Black Friday deal. I've had people email in asking if we're going to do one. We're only offering it to 5 people. So once it's up, once it's 5 people have taken us up on it, that's it. But it is a 30% off BrightInvestor annual membership for the first 5 people that use the code. And the code is Black Friday, all one word. The code is live. We've not sent out the emails for it yet, but because you guys are here, you do get first crack at it. It's the highest discount we've ever offered on BrightInvestor. We're not doing it again, but enough people were asking about Black Friday offers that we opened it up to a very small amount of people. So you guys have first crack at that, and you'll be getting an email to the entire 2,000 or 3,000 people BrightInvestor community on Monday, letting them know that that is officially live. But that is all I have for you guys as far as what's coming out, unless you guys have any questions.
One quick question. How does that annual discount work if you already have my subscription for this year?
Yeah, so do you have the monthly or the annual right now?
The annual.
You have the annual currently. So for that, basically,
Not to throw a wrench in the whole thing.
yeah, that's a good point. I guess I don't really have a solution to that right now. For it. We do have some other things that are coming out specifically for folks who do have annuals already. In the next month or two, some special offers for you. So I would probably tell you to hold on to your hat
Hold
and
tight. Okay.
yeah, hold tight as you look for some stuff that's coming out for you guys specifically. Um, this has been primarily from folks who are new to the platform or on monthly subscriptions that were looking for a chance to upgrade into an annual and be able to cash in on that. So, but for those who have annuals, we have a specific offer coming out soon to help you guys get even more value from the product. So I'd say stay tuned for that.
Okay. This is great. Thank you so much.
You got it. All right, guys. I will see you next time. We
Thank
are
you.
going to. You got it. We will not be having it on Wednesday because it's before Thanksgiving. People are going to be with families. So just a high level, we're not going to be having this next Wednesday. We probably will have it on Saturday. I just want to let you guys know. We're going to take that Wednesday off because people are going to be traveling and doing that whole thing. And so I'll likely see you guys next Saturday, and we'll get you an email out soon.
Okay. Happy Thanksgiving.
You too. All right,
All right.
guys.
Thank you. Bye.